Welcome to The Money Factor. I'm Ian Varley, CEO of Eagle Business Credit. On today's show, we're going to be talking about future challenges that may face you and your business. On the show with me today, I have Chris Varley, a member of our senior management team here at Eagle. Chris, welcome.
Thank you.
You've got a wealth of industry experience you're going to bring to this.
I do. I've been in the industry for almost 30 years like you. And I can honestly say we've been through a lot of recessions before, but I don't think either of us have ever experienced, an overnight shutdown of the economy quite like this one.
That's true.
I think the knock-on effect is going to be felt through businesses alike for many, many months to come. And I think they need to be prepared to weather the ups and downs that they're going to experience over the next few months.
Yeah, exactly. Small businesses are facing many threats right now and for the foreseeable future. I think, we've seen it both with existing clients and just generally out there that the biggest thing is revenue. And the drop in revenue that a lot of people have seen when the shutdown started. There's many clients in many industry sectors, they've all been affected. So the drop in revenue, I think, is the first thing. And how is that going to impact them? How are they going to bolster that trade and get back those losses?
Obviously a drop in revenue for any company is catastrophic. Without revenue, you're not generating invoicing and money coming in, and without money coming in you can't pay your employees, you can't buy more inventory, you can't keep the lights on. It's that drastic, and ultimately that leads to losses and could lead to company failure.
Cash flow, it's the lifeblood of any business. If your revenue is down, your cash is hit. And making ends meet is what we talk to a lot of businesses about right now, and how can we help them. So definitely the biggest challenge, I think, is the shutdown, the implications in revenue, and the effect on cash flow that has caused.
So a business owner, what's the first thing they need to do to prepare for that decrease in revenue, do you think, Ian?
Yeah, looking at your financial forecasts, you've got to basically start again. If you're losing a huge chunk of revenue because customers are not ordering, you've got to look at your costs and see if there are certain, savings that need to be made immediately. A lot of people have managed to get a PPP loan or another SBA form of finance to help put a Band-Aid on that immediate impact.
Which has been really good for, companies.
It has. Yeah, it's helped a lot of small businesses where they had to completely shut down. But it's not the answer. It's a temporary fix. You have to look beyond that now. So for the next 6-12 months, what are you going to do? How are you going to build that revenue?
The PPP was only supposed to supplement people's payroll costs for 2, maybe 3 months if you could stretch it out, and thereafter it really stopped. It didn't cover a lot of your necessary overheads either, like inventory and keeping your business going. It just kept your employees paid.
Exactly.
But it wasn't a working capital solution.
No, it wasn't. And the other thing is, a lot of companies are finding that their receivables have been stretched. They're not the only business that's hurting, their customers are as well.
Right.
So if their customers are taking longer to pay and their revenue's down as well, they've got that double impact. So managing your receivables and making sure that your customers are paying as close to terms as possible wherever they can, those are some really important things that businesses need to focus on right now.
And I think you've hit on a really important point there, Ian, that, you run your business, you're not necessarily an expert in credit management, and you're not getting access to information that may change your mind on, future supplying of customers that you've dealt with for years. Tough as that sounds, you don't want to be putting out goods to people that can't pay.
Right.
And as we're seeing right now in the economy, well-known retailers are failing left, right, and centre right now. So, people that you think could afford to pay you in the past might not be able to now. And how do you predict that uncertainty? And particularly when you don't have access to, a lot of the industry credit management information reporting.
Yeah, exactly. So companies really have to tighten their belts. They've got to manage their receivables. Don't be granting credit to new customers unless you've done your research.
Right.
That's important.
Very important. Even people that you've kind of got away with in the past and they've always paid you in the end, that might not be the time to take that gamble.
Yeah. We're asking our clients to talk to their customers and find out a little bit more about their business. Go deeper into that relationship. Who are their customers? Are they getting paid right now? By all means, work with them if you want to grant extended credit. That makes sense, and it will help your relationship with them long term. But be very mindful that there's going to be a wave of insolvencies that's going to hit, unfortunately. But there's so many companies that are in financial distress right now. So managing credit is really important right now. So right now, business owners are finding that the traditional sources of capital that they were able to go to have dried up, whether it was an online lender that they used to maybe get a loan from time to time, a couple of times a year. Many of those lenders have really just shut up shop and aren't around.
And the reason for that obviously is without revenue coming in, they can't do their assessment of cash flow. I mean, they approve people based on deposits going through your bank account, and if you haven't got any revenue, you've got no deposits in your bank account. Now they can't do anything for you, so they're not as likely to lend as they were before.
Exactly. Banks are also tightening up. They are predicting again a large default rate that's going to impact them, so they're tightening their belt on their credit criteria. It's much harder to get bank loans at the moment. So again, credit and availability of credit. There's going to be an increase, I think, in predatory lending, where you get, short money lenders will come in and charge ridiculous interest rates, and that needs to be avoided. I think that's something that's a threat for a lot of people. And, where previously they could draw on friends and family or personal savings, maybe that isn't an option anymore.
Right.
So the challenge that they will really face is access to capital.
And again, it's whether or not you need a quick injection of capital, like a small business loan to get you over a hump, or you also need to predict your medium to long term working capital needs. And I think that's something that people shouldn't forget right now. Like, you may be able to get a loan, you may be able to borrow $5,000 off your dog's aunt or whoever it might be, but that's not going to see you through November, December, January time.
Right. And even if you have a bank line of credit, maybe your profitability's taken a hit. Maybe you're going to breach one of the covenants.
That's a good point, Ian.
Yeah. You could be thinking you're okay, but actually heading for a crisis without realizing it.
So what might happen if someone breaches a covenant with their bank, Ian?
Exactly. It's difficult to say, but usually the bank will certainly reach out to them and talk about maybe there's a cure provision in your loan agreement, something that could be done. Maybe they'll issue a waiver for a certain issue that's come up. Banks are going to want to work with you if you've had a good track record. But if you're seeing your revenue has just disappeared and you're facing significant losses, you may find that you get a default notice and you've got to find a solution quickly. So it is very difficult times for everybody. The challenges are going to last with us for some time, unfortunately. So long-term financing right now is a challenge for many people, but there's some good news out there. There are solutions. We're seeing a lot of inquiries where maybe people have taken out 2 or 3 different online loans. They've stacked them, so to speak, but they have great receivables. They still are getting good orders. Those are the types of clients where we can get them into a factoring facility very easily, pay off that debt that's a millstone around their neck, that's high interest rates, and really get them into something that's going to work better. So
right. We've seen clients with that before this issue, hadn't we? We took somebody on that had 5 stacked MCAs and a tax lien, and the repayments on that alone were suffocating him. So by coming to us, it helped him get rid of that repayment obligation.
Right. And companies try and make it through. So if you are saddled with these loans, you're going to want to keep out of a default. But ultimately, it's going to affect your business credit, because if you do slow down on paying your vendors because now you're paying all these loans just to keep them current, you're going to find your credit's been impacted. So again, there's a double-edged sword to this. You want to look at alternatives. It's okay to pay them off. That's a good thing. But if you're finding that you just can't make ends meet and it's really expensive, look at alternatives. And factoring is a great solution for that.
It really is.
So again, if you have great commercial receivables, we can help you. Factoring is going to be an answer for you.
So one of the most important aspects of factoring is, even if you've hit that bump in the road, we're not going to turn you down just because you're now making losses or your revenue's dropped.
Right.
If you're still trading and you have business to business receivables on open terms, we can help you. You can leverage money out of your open AR.
Exactly. Your personal credit's not an issue to us, so if that's taken a hit at the moment, don't worry. We don't even look at it most of the time. It's not important. We want to look at who your customers are, what your product or service is.
Right.
That's the key to this. And looking at your customer credit is going to be very important because it's really how we will approve your financing facility with us.
But we've also got access to so many different reference agencies and information out there just because that's what we do all day long. So we can get notifications from people like D&B, Experian.
So your customer credit is important. But again, don't worry, if you're finding your customers are stretching out their payments, that's okay. We expect that at the moment. Again, it doesn't mean that we will turn you away. We want to understand what you're doing to try and turn things around. And using us to check customer credit is really important, as we've discussed right now. You don't want to be taking on new customers that really don't have the ability to pay you.
And we're experts at it. We've done this for many years. That's the whole crux of our business. We monitor, business performance, because that's how we lend to our clients. So we're very on top of monitoring any trends that might be going downwards, getting information from credit reference agencies, sharing information with other factoring companies. So we should have a lot of early warning signs that there could be a problem. And also we're proactive about managing on the collection side.
Right.
So whereas you might not necessarily realise that, you're now 30 days beyond terms, we'll let you know if it is, and we want to make sure you get paid. And if there's a shortage of cash on the other end, you're fairly high up that list for getting paid through the relationships we already have with your customers.
Factoring not only gives you the cash you need to help weather this storm and grow your business, look at it as outsourcing of your receivables management as well. We're going to look at your invoices, make sure that you have terms on there, make sure you've addressed it to the correct customer, the correct entity. And we're going to take over that relationship if you want us to. There's a number of different ways we can do this. But a lot of people don't want to be saddled with following up on those customers.
Especially now, they want you to play good cop, bad cop.
Exactly. They don't want to be that person that has to chase for the debt. They want to get a new sale. So again, you can use us to politely and professionally follow up on that receivable. Is it in the system? Is it approved for payment? All of that comes to us, freeing you, the business owner, to talk to your customer to get more sales, which is really important right now.
Right, and don't forget, that kind of service doesn't come with an MCA or a bank loan. Right. You're out there on your own.
Yeah, with us you're going to get an account manager who's there for you to bounce questions off of, understand how everything works. We're human beings, it's not just a system. You do have a system that's available 24/7 to go upload your invoices, look at your payments, all of that's there. But we want to speak to you as well. We want to understand what your new challenges are, how we can help you, and really develop that relationship. Factoring is so much more than just money. It is a relationship where we can connect you with other lenders if necessary. If you're looking for equipment finance or something else that you need, talk to us, and we have usually a great solution available to you.
Well, first and foremost, it helps your cash flow, right? If revenues are going down and you haven't got money coming in as fast as you'd like it to, you've got bills to pay, you've got people to pay, you've got inventory to buy. Predictability of your cash flow is the most important thing you can have, and factoring gives that to you. You've sent your goods out, you've issued an invoice. You don't have to wait 30, 60, 90 days to get paid. You'll get paid the next day after you submit the invoices to us. Problem gone away.
It bridges that gap. So, so many companies are struggling with cash flow like we talked about, and so many of their customers are taking longer to pay. So we bridge that gap. You make that sale, you deliver the goods, you perform the service, you cut the invoice, you're going to get your money the next day.
Right.
Why would you not want that right now? The alternative being you've got to wait even longer for your money, and you run the risk of your customer not paying. Probably important at this time to talk about the difference between recourse factoring and non-recourse factoring.
Okay, what is the difference? Because I know people do get confused by those terms.
Exactly. So it comes down to who covers the credit risk. So with recourse factoring, that means that if the customer doesn't pay or goes out of business, ultimately the factor can recourse it or charge it back to you, the seller. Non-recourse, the opposite. So the factor will take on that credit risk. And a lot of people need non-recourse factoring right now because it really takes not only the cash flow worry away, but also the credit risk. So another great thing about factoring is the facility is going to grow in line with your business. So as you grow, make more sales, you can obtain more funding from your factoring company.
That's awesome. So it's very unlike a bank loan or line of credit where once you've got, you've maxed everything out or you've spent everything you've got nowhere to go. This will actually see you through and give you more. So.
And remember, it's not a loan. So you don't make any repayments. It's not debt. We're going to purchase your invoices, give you a prepayment for those as we've discussed. We get paid by your customer. So this is a cash flow tool. And again, it grows with you. You don't make the repayments. We get paid by your customer.
Right. So you don't have to then worry about, okay, it's the 15th of the month and I've got a loan repayment to make.
Many people find that extremely liberating when they move from, particularly if they've got these stacked loans, as we've discussed before, they move away from the worry of having enough cash in your bank to meet those payments to, I'm just going to get a flow of cash each time I make a sale, I'm going to get paid. It's a completely different form of financing and very, very flexible.
I mean, if I use factoring, or a business uses factoring, is that the only option that they'll have open to them, or no. How would it work?
Right, it can work in conjunction with other lenders as well. As long as we have the receivables as collateral, you can obviously go out and finance equipment, real estate, whatever else you need. As long as we have those receivables, factoring works in tandem with so many other forms of finance.
And especially right now where people have got the PPP loan.
Right.
It works really well. You would have had your injection, you can use that to make your payroll for the next few months, but you still have the ability to go out and take a factoring line as well to help you with your working capital.
And remember that with a good, strong cash flow, your business credit is not going to be affected. So you may be able to go out and get discounts from your vendors for early payment because your cash has now been accelerated. You can do that. You're not waiting to get paid, remember. So lots of different ways. Again, ultimately, we've seen our clients over the years use it for so many different purposes. Again, we finance so many different industries, different walks of life, whether it's a transportation client and they need the money just to make the fuel for the next load, whether it's a construction company, whether it's a manufacturing company. We can help so many different entities. And really, we're just going to ask you about, okay, where you're at, what's your receivables, where are you trying to go? And we'll make a quick determination as to how best we can help.
I mean, the one thing that I'm really proud of, that how we've managed ourselves over the last few months, is we haven't changed our business model at all.
Right.
Our facilities are the same, our fees are the same. We're not taking advantage of anyone or, doing things differently. We're doing the same as we always have done because, at the end of the day, we know that works. We've been doing it for 30 years or so.
Right.
And seen through many times, good and bad. So no, it actually works in all those situations. And we won't just throw a client out because their revenue's dropped or they're starting to make losses or charge them more money because of it.
Right. We're here to help. And again, we're not scared by a recession. We're not scared if you have these bumps in the road. Maybe you've got an IRS issue. You can have so many different issues of business. We understand. And, there are things that we can do to even go beyond our facility, whether it's an over advance that you might need or something specific to help you with a particular problem. So it's a very different form of finance. It's a relationship-based tool, and it goes beyond a loan. It's nothing like a loan. You can talk to us about particular challenges that you're having. We'll try and brainstorm it with you and figure it out and get a way to get you a solution.
Right.
Ultimately, we know that our role is to help you from point A, where maybe you're in a desperate need right now, to point B, where hopefully you either are self-financing or you can graduate into a bank facility.
Right. We sit, and it does say, I'm always proud when you see people do that.
Right.
You've done your job and you've seen them through, and you've made friends along the way.
Exactly. Yeah. Well, thanks for watching this episode of The Money Factor. We know it's difficult times for lots of businesses out there. Chris and I are here to answer any questions you have. Please reach out to us. We're more than happy to help.